Thanks for clicking. The Bank of Canada could be done cutting interest rates. This was the messaging at this morning's press conference after the Bank of Canada cut interest rates again by 25 basis points. And yeah, the market did appear to believe the central bank, with bond yields, which dictate fixed mortgage rates, actually rising following the bank's announcement.
It's payday, boys.
Well, yeah, we'll no doubt see hundreds of TikToks following the announcement saying that since the Bank of Canada is done cutting interest rates, you better buy now as they're not getting any better. As usual, a bit of history and analysis could in fact be in order.
I can't do that.
Who can?
So what I want to do today is go over the bank's interest rate announcement, taking a look at the press conference held thereafter where the governor addressed rate cuts, money printing, and the housing market, and then discuss some implications. We are coming down to the wire in the race for the Award for Excellence in Canadian Journalism, where we tally the number of rate cut questions the governor received in 2025, questions he never has and never will answer, awarding this trophy at the end of the year. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this policy announcement. Onto the bank's interest rate announcement, lowering the policy rate by another 25 basis points, citing ongoing weakness in the economy. The bank noted that while economic growth is expected to resume by the end of this year, it's expected to remain weak, coming in 1.5% lower than expected by the end of 2026. With that said, one thing that was abundantly clear in the press conference: uncertainty.
In trade uncertainty, there is an uncertainty, is considerable uncertainty, and the ongoing uncertainty. There's a lot of uncertainty.
I don't know. I don't friggin' know.
Now, the part that's making the headlines, the bank did say that it thinks the current policy rate is at the right level to keep inflation at 2, while also helping the economy. The bank also said that that could change if the outlook changes. And just a quick note on that, a brief note before moving on to the press conference. In much the same manner as the bank wasn't going to acknowledge inflationary pressures back a few years ago when they told us interest rates would be low until 2023, as if they did, Canadians wouldn't have spent, they wouldn't have borrowed, which the Bank of Canada very much wanted them to do, even though the inflationary pressures were obvious if you were looking. If the bank actually thinks that the economy is going to be worse than they're disclosing, or that interest rates are in fact going to have to be lower, again, they're not going to say it, as that would induce Canadians to not borrow, not spend, as of yet, which is what the bank wants, supported by an offhanded remark from the governor at the press conference.
Well, if it's stronger than we forecast, great, but
in this time, unlike during the pandemic, they've left themselves an out, letting us know that if the outlook changes, if the economy is worse than they're projecting, they could resort to rate cuts again, which, a further weakening of the economy is not exactly out of the realm of possibility. Now, I don't know if the economy is going to be worse than the bank is projecting, but I've always found it useful to view these announcements through the lens of what the bank says versus what it wants, as the raison d'etre for these announcements is to affect behavior. And right now, the bank wants Canadians to borrow and spend, which they're not going to do. If they think the economy is going to worsen, they're going to save their money. And they're not going to spend, they're not going to borrow if they think interest rates are going to be better tomorrow. But that's just how I look at it.
At least that's the way I feel about it.
On to the press conference. First up, literally the first question of the conference.
Why are we not talking about more stimulus from the Bank of Canada?
And to answer that, the governor really didn't, just noting everything that monetary policy cannot do.
Monetary policy can't target specific sectors. It can't target the hard-hit sectors, aluminum, steel, autos.
And just to show that that question was ridiculous on its face, we already knew the answer. And here's how I know we already knew the answer.
Monetary policy can't change that. Monetary policy can't.
Which is what we got today.
What can monetary policy do? Well, first of all, monetary policy, let me start with what it can't do.
And then, much to the chagrin of the Globe and Mail, I'm sure, Reuters stepped in to tie up the contest.
Governor, you have said that if the outlook materially changes, then you will respond. In your view, what is a material change? How will you define this material?
And that was all for the question on rate cuts. The Globe and Mail, Reuters, now neck and neck. I never really considered what we would do about a tie. Maybe we'll do some sort of vote. Any suggestions in the comments would help.
Give me it!
And then, following that nonsense, we actually got a fairly nuanced question from Bloomberg, followed by a very unnuanced answer coming from the deputy governor.
Hi, Governor.
Deputy Governor Tony Gravel said that the bank is going to restart purchases of Treasury bills in the fourth quarter to get to the right level of settlement balances. Are your plans, do they remain the same, or are you waiting for more details from the budget?
And that's a decent question, with concerns growing over the amount of debt, the amount of money that the Canadian government is about to borrow, and the Bank of Canada set to buy up Treasury bills in the near future. Does the Bank of Canada plan on buying up more sooner? And then we get Rogers.
It is the fourth quarter. I'm going to turn to the Senior Deputy Governor.
I'm going to give you the same update I've given you at the last two press conferences, which is our plan hasn't changed. And if it changes, we would provide advance notice. We would be very transparent and upfront about that.
Well, and you're making me defend Bloomberg, which I don't overly appreciate. It's not an unreasonable question. The central bank had to inject money into the banks as late as a month ago. Bank reserves are getting low, and the government is about to borrow an awful lot of money. So is the bank going to be buying up marginally more debt?
You're talking shit. It's none of your business.
And then finally we got a really good question from Rob McClister, though I'm not exactly sure the realtors are going to see it that way.
Is there any meaningful risk that cutting rates today could reinvigorate real estate and cause inflation to remain stickier for longer?
And then, again, Rogers wasn't overly clear.
I think we don't specifically model what a rate cut is likely to do directly on housing activity. We do see some pickup in housing activity in the forecast. You'll see it's in the NPR we published today, but we'll watch it closely.
You don't think about what interest rate cuts are going to do to the housing market? Again, what they say versus what they want. Given that the bank has leaned on real estate in the past, my guess is the central bank does in fact monitor it. And then finally, I just want a quick note because we did get quite the question from the Toronto Star.
My question has two parts. So does the Bank of Canada still think that Canada will avoid a recession in 2025?
Do you read these things before you get on the phone call? I was halfway through the script when the question was asked, and I knew that the bank isn't projecting a recession, it's projecting weak economic growth, though expected to turn positive by the end of 2025.
With respect to recession, the second quarter was negative. Negative economy contracted 1.6% in the second quarter. Our outlook has growth resuming, but certainly in the second half of this year, we expect that growth to be very modest.
You're welcome here at any time.
So the bank has cut interest rates by 25 basis points. They are saying that this could be the end of the rate cuts during this cycle, though they have left the door open for more cuts if the economy weakens.
If the outlook changes materially, we're prepared to respond.
Again, not exactly out of the realm of possibility. We didn't get a whole lot of useful information at the press conference. We didn't get many useful questions either, and the ones that we did get were met with near contempt. Unlike a lot of the questions, from the ones to whom you grant the interviews, these were actually decent questions. And again, just to reiterate, watch what the bank says versus what they want. They want Canadians to borrow and spend. That's why they cut interest rates. If Canadians think more rate cuts are coming, if they think the economy is going to worsen, they're going to save, and they're not going to borrow. They're going to wait for that better interest rate. And the bank very well knows this. With all of that said, we will obviously continue to track how the economy plays out, and more importantly, the Bank of Canada's reaction to it on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.